So the
Right.
Shanghai Gold Exchange and the Shanghai Futures Exchange combined have around 2,000 to 3,000 metric tons of silver on in
Okay.
any given day. Any given day. They keep it
Right.
around there, but it's like if it comes in, it goes out, right?
Right.
That's all they have.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
All right, Eric. What do you think, and in the context of anything you want to talk about, what do you think the underlying need or purpose is for us to repatriate gold so aggressively?
So I look at it from a U.S. Treasury market perspective because, as you guys probably know, right? Look at the U.S. debt clock right now. The U.S. Total national debt is at $36.5 trillion right now. It added $1.5 trillion in less than 2 quarters.
Right.
I looked at it. I mean, it's real, right? And Scott Bessent came in, and what did he say? He said that the long end of the U.S. Treasury bonds is what he is most concerned about. Why is that? Think about that. When Yellen was, in charge of the U.S. Treasury, me and Vince discussed this on and off so many
Oh,
times.
yeah.
And what happened when Yellen was there?
She
Um,
did. Oh,
most
you're not
most of
asking
the
me?
most of the no, I'm just going to answer myself. So
Socratic method.
most of the U.S. Treasuries that they issued were give you an exact number, right? Like not exact, but like approximate from the U.S. Treasury. More than 50%, 55%. Basically short the like T-bills.
Right.
So only less than 45% are NOKs, which are medium term, and long term treasury. Okay? That's a big problem. They're issuing less long term US treasury bonds and more T bills because they have no choice. Because, like, what they're doing to Russia, freezing Russian assets, none of the BRICS countries want to hold 10, 20, 30-year US treasury bonds. There's no security. There's that huge ass duration risk. So everybody
Right.
wants, T-bills because that's essentially just cash with a yield attached to it, and that's just the lower risk U.S. Treasury products that non-U.S. allies and even U.S. allies want to take
Right.
on, right? So they have a big problem with the U.S. Treasury market dysfunction. That's
Right.
what this is, right?
Yeah,
And,
so let me
yeah,
see if I understand
yeah,
this before you tie it to gold. Let me see if I understand this.
yeah.
So we talked about this before. I just want to put it in different words.
Okay.
Back when Yellen and company, this is going to be political, but I have to say, back when Yellen and company were desperate to do everything they can to keep Biden in office, they decided instead of borrowing on the 30-year bond, to simplify it, they were going to borrow at the short end. And the reason they didn't borrow on the 30 end, directly to Eric's point, is that to put new supply of treasuries at the long bonds when no one in the world wanted them. China was selling, Japan was selling to support their own currency. I'm not defending her, but she was worried about it being a disaster. And so she moved it short term. And in effect, Dave, she punted the problem down the road to the next administration, which is why Eric Besant is like freaking out about the long end, right?
Yeah.
That's what you're getting at. So how's this
Yeah, so
work
the
with gold?
story, yeah. So I'm just going to continue the story because we're still on the treasury,
Yeah, yeah.
story. Let me finish it, okay? So,
Oh, yeah,
so
sure.
they got roll over $7 trillion this year. So
Mhm.
they got 7 trillion. As I understand, it's just rolling over. So it's just stuff that mature that they need to find new buyers for.
Right,
Okay, and main reason is because a lot of it, like you just said, is T-bills, right? It's short duration, matures in a year, so you got to find new buys for it, right? So what's
right,
the like? Somebody asked me when I was in doing the Chinese language show, or actually not somebody. Why asked me as the host? That's one of the questions. Why is it that the U.S. government is so concerned that wants to sell more long duration instead of
right,
short duration? The reason
right,
is simple, right? Just for the audience, if you are borrowing money to, let's say, buy a house, what would happen if the bank asks you to return the principal plus interest every year? You're screwed. you gotta go out and find that money
Right.
to give to the bank every year, right? So that example works. People understand that, right? So that's
Right.
why they want long duration. Like when you buy a house, it's 30 years for returning the principal. That's cool, right? But
The
if it's
set it
like
and forget it
every
concept.
year,
Right.
yeah,
Right.
if
Right.
every year you got to do it, no way, right? So what, I fall back on Judy Shelton because I think she's for real. All
Mhm.
right. And she was the nominee for a Fed voting member seat
Mhm.
during the last Donald Trump administration.
Right. She was shot
And
down, nominated by
you're
Trump
shot
and
down.
shot down, of course.
Yeah,
Yeah.
but this time, guess what? This time she's going to get confirmed, my friend. Because like other people who are even more crazy, I mean, more out there than Judy Shelton. Like for example, RFK, right, got confirmed, and
Right.
the defense secretary guy, right? That guy is pretty out there, and he got confirmed. So I think this time around, when Powell finishes his term in
Right.
2026, I think Judy has a very, very good shot. And so everything she says, I bought her book, by the way. It's called Good as Gold. Okay, she's talking about U.S. Treasuries and U.S. dollar.
Right.
So I
Right.
recommend everybody buy the book because it's really good. She
Hey,
laid out a plan to what they are going to do. Vince, what they're going to do is they're going to fix the long end of the U.S. Treasury. What they're going to do is they're going to introduce gold to this.
right. So
Okay.
you believe. So
Now,
you believe. Hold.
yeah,
You're going to continue, but
yeah,
I'm not going to disagree with you now. I understand
yeah,
exactly what you're saying, but I'm going to just say that you believe, as does
yeah,
she, as did I for a long period of time, that the key to making people holding treasuries, which is this
yeah,
is valid, to holding treasuries again, is to add something tangible to them, and one of those ways to do that is to throw gold out on the yield curve and give
yeah,
people, investors, a choice of buying treasuries for yield, kind of a convertibility concept versus physical gold. And this could very well be a reason that we're bringing the gold back. And I think it's certainly a very good plan. And I don't think it shouldn't happen, but I'm not going to fight you on it. I don't think it will happen because the people that are in charge of the paper side of the world don't want us to compete with our own paper. Now, it's not me. That's not my idea. Someone said it to me, but I just want to
I
say,
know. But see,
let
that's
me
only
let me
half
come
the
back to
story.
supporting.
Yeah.
Let me come back to
Okay.
supporting what Judy's saying
Yeah.
before I give it to you again. I'm not saying
Okay.
she's wrong. I'm a big fan of the concept of remonetizing gold and reducing
Yeah.
deficit and using it by creating a combination type of asset, which would do wonders for the dollar, which would do wonders for the bond market. And I think Judy's concept is very doable and would be one of the right things, one of a plethora of, not plethora, one of several really good things we could do to reduce deficit, make the dollar, the expression of the book, as good as gold again, and and basically tie our money to something a little bit more hard. I agree with all that. I hope it happens. There's no pushback.
Okay.
So, do you
The
think
key
this
to
gold
that
is for that purpose?
the
Okay.
key
So
to
I'm
that
just
though
sorry. Go ahead.
the
Yep.
key to that though is you have to have in place a bona fide system of accountability, which means there has to be an annual third party independent audit, right? I mean, China's not going to start buying our treasury bonds at out to 10
Right.
years just because we tell them it's backed by gold.
But there's a lot of logistics headaches. I agree with you.
Yeah.
But the concept is very valid. I'm going to bring it back to what Eric was saying. So
The
again,
other
I'm
problem
Okay.
with it though is it also would take a wrecking ball to the US deficit spending. And that's to me, that's the biggest reason why it wouldn't happen.
right.
I'm going to
Right.
blow your mind, guys. I'm going to tell you
All
why it's going to happen. It's going to blow
right.
your mind. Okay. So basically,
I
Julie is
want it to
only
happen. So let's go.
no, no, no. I mean, like, it's actually what she's proposing, and I'm sure she has noble intentions, right? But
Great.
they're going to use it as a sugar-coated poison pill. Why do I say that? Why do I say that? Because
Yeah.
Judy
Why?
said when I talked to Judy, I actually talked to her, And she said, yeah, well, like they're going to do this gold bond and it's going to be 50 years. Zero coupon, by the way. So you get no yield. But you get, like, let's say you buy this bond and it's 10 tons of gold. When you buy it in 2026, you get 10 tons of gold back in 2076, 50 years later. That's the concept. You get the
Right.
gold, you get the gold in weight back. So you don't lose anything in inflation, right? But to your
Right.
point and Dave's point, why would someone go for it? You're right. Nobody sane will go for it. But guess what? Who will go for it? Jim Bianco came out, okay, just recently, 2 weeks ago, and said that the Trump, like this guy's connected with DC, okay, so he's getting DC information leaked out to him, and he's saying that the Trump admin is thinking of forcing its allies, who are heavily dependent on U.S. military protection now and in the last 80 years. Okay, we're talking about EU, Canada. Canada's military is a joke. I'm going to say it here. Okay, I'm sorry. I'm sorry, all the members, the freaking liberals. Okay, dismantle your military, but it's pretty crappy. Okay, what they have in
Okay.
Canada. They depend on the U.S. So Jim is saying that the U.S. administration right now, Donald Trump, they're thinking of forcing its allies to convert a lot, maybe all of it. He said all, but I think probably around half, something like that. Like a lot of their whatever U.S. Treasury bonds and bills that they hold right now, convert a lot of it to 100-year zero coupon bond. And Jim didn't even mention gold. Like, think about
Right.
that. Think about this concept. You're holding a
Oh,
gun
I
to
thought
like
about it, Aaron.
Canada
I
and
thought
like
I thought
UK's,
about it.
and it's zero yield, and you get killed, right? If you're holding fiat. So
Right.
combine what Judy is proposing with what Jim is saying. That it makes sense, right? So basically, what I'm saying is that, like Dave's point, nobody is going to buy it willingly. No, they're not going to ask people to buy it willingly. They're going to point a gun to the airline's head and say, "Is this, or we just you get zero protection? You get zero. We're going to pull out.
That's
No,
why the
no more,
gold.
no more,
That's
right? So you get it. So they're going to force the European countries, Canada, UK, to exchange a lot of what they have right now, like in terms of U.S. Treasury bonds and bills, etc., to this 50-year physical gold bond. Okay, so at least there's that sugar coating on the poison pill, which is the gold. At least they won't lose their shirt in terms of inflation. You get
right.
your 10 tons, whatever tons of gold back in 50 years. So
Let,
that's the concept. Yeah.
let me just
Yeah.
frame this. I'm going
Yeah.
to agree with you 100%. All right.
Yes.
There are two instances in the past of that already happening successfully. The first one, it's simply a very mercantilistic way to do things, meaning treasuries are what they are, but for our special clients, they get a bonus, right? So in the 70s, when we did the oil for dollars deal, reliable but not confirmed people said, I think it was Luke Roman was one of them, said that we did a negotiation with the Saudis and said dollars for oil, but we'll give you a little bit of cream on the top in terms of interest rate. Now, that's what was reported back then, vaguely, but kind of reconfirmed over time. Now, here's my personal experience, which is going to tie this whole concept to what Judy Shelton wants to do. So let me just start with this. A gold type of bond works in private placement very easily with the people you care about the most. We are not the people, unfortunately, they care about the most. So here's my example of that. In 2016, Russia was selling oil to China. Blockchain was becoming prevalent at the institutional level, being tested. I spoke with someone who was doing wet barrels, they called them wet barrels then, oil physical deals. Russia at the time was doing deals with China for yuan with a gold kicker. So Russia was like, "We'll sell you we don't want dollars anymore." Remember, Russia didn't want dollars. We don't want dollars anymore. Here's the oil. you can give us yuan, but we need something to make it more substantive. And China said, fine, we will attach a gold clause to it. The gold will be here. It'll be in the SGE or wherever they're keeping it, PBOC vaults or some other vault. And if you want it, you can have it. Now, the relationship was of a deeper trust. And so they said, sure, we'll do it. Now, if you take that concept that I just described for gold, and you take what we did with the Saudis back then, and then you overlay Judy Shelton's concept, and you say, listen, we want you to stop selling treasuries. We want you to buy more treasuries. What would it take to get you to buy them? And they're going to say exactly what Judy Shelton is saying, exactly what Eric is saying, and that is throw a little cream on top, attach gold to it in some way, and you've got us. And I think what was an oil for dollars deal is going to become a gold for dollars deal, something like that. So I'm agreeing with you, Eric, 100%. I think that's very, very doable, and we might see it.
Okay. Well, like, I mean, you the way you said it is a kinder, gentler way. And the way that Jim Bianco said it is kind of like holding a gun to people's head and say,
well, we are okay.
Like,
I'm being kind of that. Exactly. Look, we're going to hold the gun to Europe said. We're going to hold the gun to Europe said, right? But the point is to your point about the whole defense. We're going to withdraw our protection if you don't do it, and that's tied in with something else called a market act. People for protection now. That's basically it. Before we move on to silver, Dave, did you want to add anything?
No, I mean that's I'll believe all this happens when I see it. I don't.
Right. What?
I don't think I think there would have to, like I said, a visible system of accountability, and that's what Bretton Woods did, right? Because you could actually exchange your certs for the bars.
Right.
And so I think that the U.S. would have to open its vaults to any foreign potential buyer or participant in this deal for inspection.
It would be about the negotiation itself. That will be part of the negotiation itself. Prove it. Let's see it. If we ask for it, we want it in 2 days, not 7 years or whatever it took us to get it to them. Yeah, I totally see that. It's much easier to do with trade partners to Eric's point, I'm being kinder and gentler because Russia and China are friends, right? But right now we're trying to sell to people that aren't our friends, and they're saying you got to prove it, and we're saying, well, we'll take our defense measures away, and you'll be twisting in the wind, and anyway, you could just see how it becomes a horse trading situation. All right, let's move to silver, because although silver is not the top of everyone's category in terms of monetary metal, the problem there might be bigger and more pressing. Eric, I mean, you're all over this right now, so could you start that? Could you help us?
Okay, so let's read this off the LBMA website, right? Like, because they just released the newest numbers today, okay, of their gold and silver situation. So they're saying that they have 8,477 tons of physical gold.
Right.
Only a 0.068% decrease on previous month. So that's complete bullshit. I'm sorry. Right. Because like if they are at T plus 60, how can they have like almost 8,500 tons of physical gold?
Well, because it's heavy. It's heavy. It's
complete BS, right? So what they did was they borrowed with quotation marks from central banks, and they shipped out some stuff to the US, and the rest they're still wrangling the foreign central banks, right? So like let's leave that because we're talking about silver. So silver, they're saying they have 22,462 metric tons of silver. 22,000. Okay, they're saying that it's a 4.5% decrease from the previous month. Apparently, that's a pretty big decrease.
That's huge, actually. Yeah,
4.5. But again, first of all, I just want to address the number that they are telling people that they have 22,000 metric tons.
Right.
I don't believe that number. I don't know about Dave, because why do I say that? The SGE and the SHE combined, by the way. So the Shanghai Gold Exchange and the Shanghai Futures Exchange combined have around 2,000 to 3,000 metric tons of silver in any given day. Any given day. They keep it around there, but it's like if it comes in, it goes out, right?
Right.
That's all they have. So these guys are telling me they got almost 10 times what Shanghai has. I mean,
Right.
like, first of
No,
all, right?
they don't. They
Like,
don't. I want
they
to hear
don't,
Dave.
right?
I want to hear Dave on this as well. But
Yeah.
they don't because silver is not stored. It's flows. That's why Shanghai doesn't have
Okay.
that. They don't
Okay, but
store
let
it.
me finish this. I'm just going to say
Yeah.
one more thing, Vince, okay?
Yeah.
So the problem with silver, and it's not me saying it. Robert Gottlieb, he's the ex JP Morgan commodities and bullion bank executive. He has
Right.
a blog. He talks about this all the time. Silver doesn't have a central bank backstop. What I
Right.
mean by that is gold you can borrow, right? Like what's happening with the LBMA right now. With gold, you're down to the bottom of the barrel. What do? You go to the foreign central bank and you wrangle them. How do you wrangle them? You're the Bank of England. You probably know guys at the IMF. And that foreign central bank probably owe money to the IMF or some Western bank, right? So you just wrangle them. You tell them, hey, you don't give me this gold or let me borrow this gold, I'm going to call you loan tomorrow.
Right.
Something like that, right? So
Right. Right.
so they can do that with gold, but they cannot do that with silver because
Right.
nobody has a stockpile of silver, right? So I think that's going to be a big challenge going like if that breaks, if silver goes from T plus 2 to T plus 60, there's no going back from that.
Right.
It's
I
not like
think
gold. It's not like you can put a band-aid on it like gold with the
no.
central
I think
bank borrowing. It's over. That's
that's
my
that's
that's it. Yeah.
that's actually very. Before I want both of you to talk more about this, but just to throw some 2 cents in there, it's ironic that the central bank asset they can find because of the backstop, right, Eric? And
Yep.
silver, which they continually tell you is just industrial, you can get it anywhere, they can't find because it's being hoarded for industrial as well as monetary purposes. They don't have the backstop that they need. And so it's become a flow commodity. Well, where are we going to get it? Well, let's hope that the silver apes sell some so we can melt it into 1,000-ounce COMEX bars. I mean, that's kind of where we
Yep.
are. Silver is a much bigger problem because there is no scrap. We're in a deficit, and demand continues to grow. Dave.
Well, I mean, on top of this is the fact that India and China are both in the middle of installing a national solar grid, which
Right.
requires an enormous amount of silver. So,
Right.
I mean, China produces a lot of silver, but other than like silver pandas or whatever, that they don't export it. They're a net importer of silver because their solar program consumes an enormous amount of silver. But
Right.
I was just going to say it is a much bigger problem than gold. I mean, if you believe the Silver Institute numbers, and even if they're not 100% accurate, if they're just in the ballpark, they just put out this statement last month or in January. The silver market is forecast to record another significant deficit, supply less demand, for the fifth consecutive year. So the silver market's already been functioning or malfunctioning in a state of supply deficit. And
Right.
at some point they run out of silver bars and SLV and any of the other stashes that they have to supply or to fund that deficit, right?
Right. Right. And
So
there's no
how does
old
that
guy.
get funded? There's one way.
Right.
Price is the balancing mechanism, right? At some
Right.
point, I think we'll see an enormous short squeeze that drives the silver up to prices that most people think are unmanageable right
And,
now.
and to Eric's point, there is no buffer. So it will move quickly through the system, and it will be one of those overnight sort of things.
Exactly.
Eric.
The only buffer is SLV. So watch out if you own SLV. Good luck to you. That's all I'm going to say. And then today's
Does
point, I'm
SLV
just going to
go
add one.
down or up if that happens? I'm not
That
sure I
is bad.
understand.
It's bad news bears, my friend. Like if the only backstop is SLV, that means they're going to drain SLV,
Right.
right? Like if things anything bad
If they
happens,
haven't been
like
already.
yeah, if they haven't done it already, exactly what Dave is saying. But like, I just
No.
want to add to what Dave said. China
Yeah.
also makes a lot of electric cars, and last year is the first year, by the way, right, that China's electric vehicle production and sales exceeded
Mm.
ICE vehicles. So it's now like at over 51%. It's around some estimates say it's 55 in
Right.
2024.
Right.
So and it's going to be above that, like ongoing. So it's going to be 60, 70. Like their goal is to essentially go a lot higher than even 60 because they want their dependence on crude oil to be less than what it is right now.
Right.
Makes sense because crude oil, they got China's a net importer of crude oil, right? So if they have, like if Russia cannot satisfy China's crude oil needs, China is actually in a extreme strategic disadvantage because the U.S. can just send a navy to Singapore and then China's game over. It's just like what happened to Japan
Right.
in the
China is
Second World
all
War,
about being
right?
self-sufficient, even though
Yeah,
they're
yeah.
open.
So
Yeah.
that's why they do the EV thing, right? The EV thing is cutting the oil consumption. The electrical consumption is going up, but the oil consumption is going down because they are switching over to EVs. So to Dave's point, like silver is the new oil for China. I think I told you that in our show, right? When we did what that we did with Tom, right?
Yep.
Silver is the new oil in China.
Right. It's
So
right. Metals are the new minerals, or I'm sorry,
yeah,
metals are
yeah,
the new
yeah, yeah.
energy.
Yeah.
Metals are
So
energy.
the new energy, right? So what happened in the past though, right? In the past, and Alistair McLeod talked about this recently. He agrees with me. Okay, J.P. Morgan helped China to suppress the price of silver in the past.
No. Yeah. 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 That's
All
right.
right, like because it's an industrial metal, and China needs to use tons of it, like Dave is
Right.
saying, right? Like what I'm saying with the EVs. But what's happening now? The US want to divorce itself from China in terms of manufacturing. The US want to reshore. The US no longer makes a lot of money from like a lot of the stuff that China makes because China owns the entire manufacturing value chain, like EVs and these drones, etc. Right? That use a lot of silver, by the way.
They
Okay,
own
all
the
of
whole
it.
supply. They
They own
own
the whole
all the
supply chain.
supply chain in
So
silver as
so
well.
guess what? Guess what's going to happen? I think I because I see some people say it and then they retract it because they are, how this industry is, right? People are afraid, okay? But I think what's going to happen, and it's already happening, is that eventually U.S. bullion banks are going to switch. What I mean by that is they're going to stop suppressing the price of silver
Right.
because they it's like suppression. To suppress, you got to put energy into it, okay? Like it's a lot of work to
Right.
maintain the system to suppress the price of silver. So they're going to stop because
Right.
China is no longer a partner of the U.S. for making these items for the U.S. so that the U.S. make money off it.
So
That game is
patriotism will
over.
kick in because the money's not there anymore for the banks. Is that kind of what you're
Exactly,
saying?
exactly. It's game over. It's game
Right.
over. Is it like So I think like I know it's really out there, it's wild, but I'm going to say it here. I think the miners, a lot of the miners, especially the US ones,
Right.
are going to be the new Max 7. Like it's going to be the new Silicon Valley. Because why would the American government kill its miners by killing the underlying commodities when they need these miners to be strong so that it can reindustrialize? Think about that for a second. It's
Yeah.
going to happen.
We
Yeah.
don't have a supply chain for metals, so we need to kind of fix it. I mean, we have
Yeah,
fracking.
you can't have these like they've know this better than I do. You can't have these miners like on the verge of bankruptcy, like because they can't raise capital every single month. It's just the craziest thing that I see in the
Right.
US. Some of these miners.
Let's talk
Yeah,
about miners. Let's
yeah,
talk about that,
yeah,
Dave. What's going on with
yeah.
that, please?
In terms of,
Well, in terms of whatever you want, in terms of miners, I mean, Eric is like making a point that miners are probably look, the rotation out of tech stocks is going to be into the mining stocks as we move into a potentially stagflationary environment. The question is, what are the signs that we need to look for within the miners themselves to show us? Like, is it dividends? Is it share buybacks? Like, the companies all have free cash flow now. What the hell is going on? That's my question, I guess.
Well, I mean, I was just thinking about this the other day. I mean, you obviously alluded to the fact that the market's obsessed with tech and Nvidia right now, and
Absolutely. It's marketing, it's
that's keeping
salesmanship.
money from going into the miners. I mean, the
Right.
miners are probably the only sector of the stock market where there's value.
Right.
And especially when it's now starting to look like these high profit margins they're generating are going to be sustainable because the price of gold and silver is really distancing itself from the cost of getting the stuff out of the ground, the all-in cost of getting the stuff out of the ground.
Right. And energy is no longer killing them as much as it was.
That's
Right.
right. And I mean, some of these miners are producing 40% operating profit margins. I mean, it's incredible.
What are they doing with the
Talk-
money right now? I'm talking as an unhappy investor. I'm not unhappy, but I want to say, what are they doing with the profits right now? Are they just being incredibly conservative because of what happened to them in the 90s?
I think that's part of the case. Yeah, a lot of them are just reinvesting it into their businesses. I
Okay.
mean, you know, hunting. I mean, I just did a conference call yesterday with the CEO of Fortuna, and I mean, they're
Great
plowing
firm.
a lot of the capital that they're generating. I mean, they're also buying back shares, but
Right.
they're also plowing a lot of the capital back into their business, their existing mines,
Right.
expanding the resource base, trying to extend the mine lives, and trying to increase production, and also looking for new deposits.
Right.
What I think is going to happen, and if you're an investor, I mean, the large cap producers have actually had a pretty good move over the last close to a year now.
They have. They're outperforming gold in many respects now.
Exactly. But
Yeah.
what we haven't really seen yet, and we saw this back in the 2008 to 2011 move, is a lot of really large mutual fund complexes, T. Rowe, Fidelity, et cetera. They're generalist funds, they're macro funds,
Right.
started investing in the mining stocks. And
Right.
at some point, if you're a portfolio manager of a multi-billion-dollar Fidelity fund and you're like, I can't buy any more tech, it's overvalued.
Right.
You're going to be, and then you start to look at what's going on with the producing mining companies. You're going to have to invest in those because you're going to come to the conclusion they're generating 40% margins, and they're trading at a fraction in terms of multiples that all
Right.
the rest of the stock market is. And so I
Right.
think that's where you're going to start to see money move into the miners. And with the sell off that we're getting currently, and I think this could go on for quite some time, it's obviously going to be volatile. I think that this could be, the point at which we start to see large pools of institutional money migrate into the mining stocks, and that in turn will filter down to the juniors. And at some point, we haven't really seen a cycle of M&A like we saw back in 2008,
Right.
2011. That's ahead of us also.
There are two things I want to add to that from different perspectives that are going to corroborate what you're saying before I let Eric finish that thought. Um, the first one is after the 2020 stimulus era, we'll call it, the juniors led the rally, didn't they?
Yes.
Right? And I talked to a miner guy, someone like yourself, and I said, why are the juniors not going this time? And he said to me, he goes, the rally during the COVID, after COVID, was bullshit because the juniors led and it was being driven like meme stocks. He said this rally to be real has to start with the big boys. And this was around the time that Druckenmiller bought some Newmont. And I went, oh, I get it now. You want to start with big caps, and then the other companies start. It's kind of like a trickle down in the mining thing. So I actually think that's smart. I understand that better now. The other thing is, so the well-run mines, like mining companies like Fortuna, which I happen to know them from Chris, uh, they are sinking money back into their business for long-term viability. And I think investors are just so short-term impatient now that they want the next AI. And so eventually it's almost like you buy miners when AI drops another 50%. I mean, I'm not saying to wait that long, but I am saying that there will be a change in leadership. I'm quoting Michael Hartnett now, right? The CIO, the chief investment officer at Bank of America. He said, you will see a change in leadership of stocks that rally. And he didn't say the word miners. God forbid he says the word miners. But he said right now in first place, it's AI stocks and then it's gold, right? He's talking about not silver, he's talking about gold. It's like AI, he means silver too, though. AI stocks and then gold. He goes, AI stocks are up 50%, gold is up 39%. Like he's got his little proprietary portfolio there. He said, it changes when gold outperforms these high flying Mag 7 type stocks. He goes, and when that happens, then you have stagflation, then you have US stocks going down. And then when he said that, I looked at the 70s and I went, well, your whatever they were with Nifty 50, whatever they were called back then, when they sold off, you actually had miners exploding. Now, it seems unbelievably impossible, but maybe it's not impossible that the next dump is not met with a dump by miners, but as a stable base for a higher move. Anyway.
Sure. Just to add to your point about whoever it was that referenced the 2020 rally and the juniors as bullshit, there was
Yeah.
also a bullshit rally in 2016.
Oh, really?
Yeah. And both of those periods, I wrote about this just yesterday in the opening salvo of my newsletter, and I called them false starts.
Right.
To the bull cycle, which the latest bull cycle, which I mean, arguably started at the end of 2015.
Right.
The rally in 2016, which the juniors led, was an 8-month rally. It ended in August, and then the rally in 2020 was a 6-month rally, and that one also ended in August. This time
Right.
around, I mean, the juniors are like it's like they're sitting on top of quicksand
Right. Right.
versus the mid caps and the large caps. And to
Right.
me, that is a healthy sign that the bull cycle that we're in still has another huge leg ahead of it and still has a lot of sustainability left.
Right. Which now I want to talk to Eric about this because I remember when Chinese miners started exploding as US miners were collapsing, and you have positions in both, right, Eric? How do you
Yep.
feel about this? Because you have your foot in both nations in terms of miners. Like, what do you think? How do you feel about this?
Chinese miners are a little bit different because most of them, most of the good ones, the one I own, Shandong Gold, has
Right.
it's basically government, like
Right.
Chinese government. Like you
Right.
can't operate a serious mine. I'm talking about a 1,000 ton reserve mine, something like
Right.
that, like a serious one, right, in China, without Chinese government involvement. I'm just like stating facts here, right?
Right.
And like
Right.
a lot of people think that that's a negative thing in the West. They tell me they're like, Eric, the communist parties and everything, they're gonna steal
Right.
your gold, right? But like to us in China, in Hong Kong, we look at it as a positive thing. If the government is involved, it means you're gonna make money, my friend.
Right. Right. And
If the government is involved in
culturally,
your
that's the way.
bank, like,
The
yeah,
West is all
what?
about individual democracy, and the
Yeah,
East, generally speaking, is more authoritarian. In the West, you say authoritarian, it's like, oh,
yeah.
dictator. No, authoritarian means moving as one. We're in this together. We're a team, and that's what's happening in China right now. It's pretty impressive.
Right. So having said that, I own a lot of Western miners. A lot of miners actually Dave recommended, and I strongly recommend people who are looking at miners to follow Dave. Because Dave
Right.
does have a lot of good names, and
Appreciate that.
yeah. And one of the things I learned from Dave is you got to look at for juniors especially. I like the optionality plays, which are basically you know, guys who they're still juniors, but they already got answers proven in the ground, like discovery, like what they've always talk about, right? Like in this stuff, I mean, seriously, when the juniors take off, the ones that go up the most, in my experience, I don't have a lot of experience like Dave, but in my limited experience, the ones that go up the most in terms of juniors are the ones with already like a lot of answers in the ground proven. Because then you can just calculate that. Like Eric Sprout talks about it all the time, right?
Right.
I own some free gold. I don't know if Dave likes it. I bought it pretty cheap, like 60 cents. Everybody was like, oh, it's going to crash, whatever. I bought it. It's now over $1. There you have it. So
Let,
we
let,
just need
let's end
to,
with
yeah.
let's end with some names. Let's end with some names. Are you guys comfortable sharing a couple mining names. They don't have to be your only or your best or just or
You want me to say some right now? I can just
yeah.
throw some names out there,
Just
like Discovery.
give us Eric. I'm going to let Dave think.
Yeah,
So I'm going to put you on the spot because you're ready, Eric.
yeah,
Give us three mining names in the U.S. that you like
perfect.
and why, and then Dave, I would obviously you can give us more as well, and your mining journal shows that. You could do that as well if you don't mind. Eric, what do you
Sure.
think?
Okay, so I'm just gonna give three names: Abra, Discovery, and Free Gold. Simple reason, like I said, ounces in the ground. Exact figure, go look at them yourself, right? But like they got huge reserves, right?
Right.
And that's my like. I mean, there are many, right? Like there are many shitty ones too, but these are the three that I so far treated me pretty well, right? And thank you, Dave, for recommending Discovery. I mean, it did well. Thank you, Dave.
My
Awesome.
pleasure.
Yeah,
Talk to me. Talk to us, Dave. Help us out here.
Sure. I mean, well, Eric mentioned Discovery. I've been
Now you
pounding
have
the
to give us
table on
three
them.
fresh ones. You can't just give
Sure.
us
No, yeah, no, I was just gonna,
right, Eric.
reaffirm that,
yep,
in fact, I
definitely.
laid out the case yesterday on my newsletter for why, I mean, Discovery's what doubled this year. And I laid out the case why it has at least another double ahead of it over the next 12 months.
Nice.
Um, the ones, okay, so you mentioned mining in China, and the producer that I'll mention is Silvercorp,
Mhm.
and they are extremely undervalued, and I think it's because people misprice the jurisdictional risk of operating in China. But they're one of the more pure silver producers, and they've also got a couple projects they're advancing in Ecuador, and they have a 25% stake in New Pacific Silver or New Pacific Metals, whatever it's called, which has two highly prospective projects down in Bolivia, which is another very mining friendly jurisdiction that people probably associate with
Right.
jurisdictional risk. Um,
So Silvercorp. Who else?
Silvercorp, SVM is the U.S. ticker.
Right.
There's another one that I really really like, and I've written about it, publicly. So it's not like I'm giving up anything, that my subscribers pay for. Is Cabral Gold, and they've got a gold project they're advancing down in Brazil, which is also
How do you spell that name?
Cabral.
Okay.
They've got a gold project they're advancing down in Brazil, and the top layer of their deposit, and they actually have three of these deposits now, is gold that's, I mean, it's basically near surface or at the surface, very inexpensive to process, and they're in the process of advancing a small mining operation. It's already permitted that'll allow them to produce this top layer, saprolite for anyone who is familiar with the mining industry,
Okay.
and produce cash flow that they can use to advance the bigger, much bigger, a little bit more underground. It's not going to be an underground mine. It's still be open pit. Um, the much larger deposit and mine that exists on the property. And I honestly think that this thing is a 10 bagger eventually.
Nice.
And
Nice.
then
So
another one that
basically,
I
they're
really like.
financing their own. They're basically taking the cream off the top, which is less expensive operationally to finance. They're probably not financially very heavily leveraged. Does that make sense?
No, they don't have any leverage. It's just the problem is they're highly undervalued, and it's a pain for these companies to raise capital.
Right. We
When
need
your
a capital.
stock's trading at 20 cents,
Right.
to raise the capital you need, they'll be able to internally generate the free cash flow. That's actually a trend that's going on among the junior project development companies. A lot of them are, well, I wouldn't say a lot of them, but there's a handful of them that have now, either they're developing their own operation like Cabral, or
Right.
they've purchased small mines that they can operate and generate cash flow to develop their bigger project. Discovery just did that with the Newmont assets that they bought up in Canada. And then the third stock I'll mention is Heliostar Metals, and they
Right.
did the same thing. They bought two small operating mines down in Mexico, and they also have a much bigger project they're advancing, the Ana Paula project in Mexico. And these mines are going to generate the cash flow for them to get Ana Paula over the finish line, convert it into a much larger mine without having to issue more shares.
It's interesting. So the mines you're describing are uh, changing, meaning like when I did pay attention to miners for a very brief period of time, it was financial leverage, discovery, operating leverage. Now it's hit singles to finance the home run that's about to come.
Exactly.
It seems that way. All right, so I'm gonna say these names again. First of all, I want to say that these are suggestions. Everyone should do their own due diligence, and I would suggest that you subscribe to the mining stock journal, I should say. All right, so Eric, Abra, Discovery, and Free Gold, right, Eric?
Yes, correct.
Okay. And David would be Discovery as an overlap, Silvercorp, Cabral, and Heliostar, correct?
That's correct.
Awesome. All right. Before we go, is there anything you guys wanted to add? Gold's going to infinity or zero, or silver's going to infinity. Dave, I'm going to start with you and let Eric wrap this up for us.
Sure. First, I want to say thanks for hosting this discussion. It's been awesome. I've really enjoyed it. And
I'm glad. Thank you for having and sharing this.
Yeah. I always learn stuff. But and I say this a lot, especially right now, because I think we're in the middle of probably what will be the most powerful bull cycle in the precious metal sector since I've been doing this. And I started right as the first one back in 2001 was starting. And I think, if you're frustrated, especially if you're overweighted in juniors, as I am, you just need to be patient because, I believe that we have, like I alluded to earlier, a very, very powerful move higher that's going to come. And all the factors that support higher gold and silver prices keep getting stronger every day. And if you want to just invest in the safer, larger cap mining stocks, great, you'll make a lot of money. I think if you have a portfolio of well-selected junior microcap stocks, there's potential there for lifestyle changing wealth to be made.
Right. Thank you, David, for coming on, and I appreciate that insight. Treating your portfolio like a hybrid of that is something that I would do. That's the way I operate. I don't know.
That's kind of what I've started doing too.
Yeah. So, buy the GDX and then buy the kickers. Eric?
I just want to say thank you, Vince, for hosting this, and thank you, Dave, for coming on. I mean, I should have done it with you guys way earlier, but
this is your idea, Eric. I'm sorry.
This is your idea, Eric.
Interrupting you
awesome.
again.
Thank you.
I'm interrupting you. This was your idea. Thank you for coming up with it. It was a great idea.
Yep, and like I said, we should have done it sooner, and I had a great time. But this is to your audience, Vince.
Yeah.
If you do not own any precious metals right now, no gold, no silver, no miners, and you're American, you're in the U.S. I just say this: for God's sake, buy some silver. Buy some silver, okay? Buy some. I know Vince say this all the time, but buy some physical silver for crying out loud, okay? Why do I say that? Because you can still buy physical silver in the U.S., peer-to-peer in the U.S., for just a little bit above spot price. That's how bad the sentiment is for precious metals in the U.S. right now. Okay, so if you just go out there, if you're not comfortable, buy a tube. If you're on a budget, buy 10 ounces. If that's too much, buy 5 ounces. Start somewhere. Buy some silver. That's my recommendation.
That's a great
recommendation.
To add to that, take possession of it. And buy some gold too.
Yeah. Take delivery.
Buy both.
And possession. Exactly.
Yeah, exactly.
That's a great coin. Hold the coin in front of your shirt because it gets lost in the background. Is that
actually one of my subscribers sent this to me? I forget what stock it was. He made a lot of money on. Yeah, and it was his thank you. It's a 10-ounce Canadian maple leaf.
That's sweet.
Wow.
That's sweet. I'm going to make sure that your links are in the post, so you don't have to say it again. If you want to, that's fine. But it's I don't have them handy. It's King Kong on Twitter and InresV, Investory for Dave. But I will have them in the post, as well as the links to your newsletter and anything else that you'd like to have in there. I really I'm grateful for you guys to come on here and for helping me kind of ease into something new. You guys were perfect to help me do it. Thank you very much. Have a great day.
Thanks, Vince.
Thanks, Vince. Thanks, Eric.
Thank you, Dave.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.